ICT gave everyone the same playbook, and when everyone is trading the same setups, the edge tends to disappear. But was there even an edge to begin with? Candlesticks are just snapshots in time. It's like watching a movie in snapshots of 5 minutes instead of having access to the whole movie. You're not going to see everything. A lot of assumptions are being made about wicks especially. The only thing that we know for sure with a candlestick like this is that we open here and then we close here, and then within that time, whether it's a 5-minute or a 30-minute candle, we visited those prices up here. We don't know what happened up there. We don't know why the price rejected. We can just assume. Was it real selling or just buyers disappearing? A wick can form because aggressive sellers hammer price down or because buyers simply stopped participating. Completely opposite scenarios, identical wick. Was there massive size traded at the high or was it thin air? A low volume wick is just a stop hunt. High volume means a real fight happened. I'm not gonna go over every single scenarios in this video, but you get the idea. The candlestick game has been figured out. It doesn't matter if you call sell-side liquidity resistance or if you call a breakout a fair value gap instead. At the end of the day, you are still trading candlesticks pattern. And they are, without exception, the result of the traditional price action theory of support and resistance. Now wait a second. I'm not saying that you shouldn't trade ICT. I'm also not saying that you should not trade candlesticks. I trade candlesticks myself every single day. That's not the point I'm trying to make. I'm just trying to add some nuance on it, you know what I mean? So what should you do then? Well, I'm not gonna straight up tell you what you should do. First of all, because no financial advice. But we can still go over a few Orderflow setups that helped me have $50,000 in payouts from lucid trading, one of the best propfirms out there, or making over $103,000 in payout with only $1,000 spent. Quote, one of the best ratios we've ever had. That is from the CEO of Mafu himself, which is also one of the best propfirms out there. So the point is not to flex. It's just to show you that these concepts work. And if they are executed well, they can place you in the top 0.001%, literally. So what do I use? As a veteran trader with 10 years of experience, I've tested everything. And I've narrowed down the amount of information I see on my screen to what's most important and useful. There are 3 important studies on this chart. The first one is delta, which is orders executed at the ask minus orders executed at the bid. Delta is probably the best indicator to identify patterns like absorption, which we're going to see an example of in a few seconds. Then we have volume profile, which is logged to the current session, which is from 9:30 to 5 p.m. New York time. And lastly, we have the big trades indicator, which will tell us where market participants like big banks or big hedge funds are interested in taking trades. Now let's look at 2 textbook absorption setups from this week and last week. First of all, at that point, we were in an uptrend, so we kind of want to look for longs until the market reverses. We have this zone right here that is acting as support where the market already rejected multiple times from. Now look what happens next. Let's stop here for a sec. Look at this delta. What does it tell us? It's telling us that at these prices, sellers are aggressively trying to push the price down. However, the price is stalling and they are being absorbed by passive buyers on the bid. As sellers become exhausted, the price naturally drifts back up. Once we reject from that area and go back above that negative delta cluster, it becomes a long setup targeting session highs. Now let's look at another long setup, but on ES this time. This is New York Open. This is our low of the day, and this is our high of the day. The market has been ranging between those two levels for over an hour. Now let's see what happens next. Now let's stop here. There are multiple important things that are happening right now. First of all, the market has made a new low. However, the price is being rejected quickly back into the range. Moreover, we can see that there were aggressive sellers down there, but they were unable to push the price lower as they were met with passive buyers. Once we reclaim that level and we break above that microstructure here, it's a long. This is a textbook look below and fail. So, could you have taken these setups with candlesticks only? Yes, of course. But Orderflow will allow you to identify pivot zones that wouldn't be visible with candlesticks only. If you enjoyed this video and want to see more Orderflow setups, feel free to join my Discord. It's free. You can find the link in the description below. I'm also doing a Lucid 50K Pro account giveaway that ends tonight. Link in the description as well. This is the first video of an Orderflow series. Let me know what you think in the comments, and if you liked it, leave me a like and subscribe. Thank you very much, and see you next time.